Good morning. We continue with departmental functions. The last class we talked about human resources department. Stop writing this. Today we're going to talk about finance department and marketing department. So we're going to start with finance department. When we talk about finance, finance simply means disbursement of cash from the surplus unit to the deficit unit. That means making sure there's availability of money. That is what finance is. Availability of money. Making sure that money is always going to be available for the company to use. That is finance. So the department that is saddled with the responsibility of making sure money is available is called the finance department. Do we understand finance department here? Yes. So the finance department, this is the department that is responsible for all the financial transactions in and out of the organization. So whatever financial transaction that comes into the business, that means the dealings of the business with customers or the dealings of the business with other businesses. These are financial transactions in and out. Do you get in and out here? Yes. The dealings of the business with its customers and the dealings of the business with other competitors or other suppliers, other businesses. This is what we call financial transaction. They need to be recorded. Do you understand financial transaction here? Yes. So what are those tasks carried out by the finance department? The first one, details of sales and purchases must be recorded as they are used to prepare financial statements. So whatever transaction we do, whatever relationship we have with customers, suppliers, whoever we have relationship with, they have to be recorded. Because as soon as they are recorded, we use it to prepare our financial statement, which comprises the statement of profit or loss and other comprehensive income and the statement of financial position. So for every organization, they have, at the end of the year, they prepare the financial statement. So details about different transactions they've carried out during the year will be recorded in the financial statements. So that's what? What do they do with that? They use it to determine the profit they make, and also they present it to shareholders. Also, they can use it for tax, they can use it to present to the tax authorities. And for private limited companies and public limited companies, these are what they have to publish at the end of the year. Clear? 2, wages and salaries. This applies to processing the remuneration of workers and also providing them the pay slips and also make payments to the tax authorities. So it's the finance department that will pay your salary as an employee. And not only that, if there is income tax, they have to remit that amount to the tax authorities. They remit it. So they deduct it from your account, from your salary, and it's being remitted to tax authorities' account. Stop that right, please. Do you get the point here? The third one, credit control. When talking about credit control, it's simply talking about how you manage your debtors, those that are owing the business. So it is important for the company to monitor how money goes out and goods, how customers buy goods or services from them, especially credit customers. So they ensure that credit customers pay on time. Your credit customers are your debtors. They have to pay on time, because if they don't pay on time, you're going to have a problem with cash flow. So that means money is goods are going out of your company, money is not coming in. Then there will be cash flow problem. So it is the responsibility of the finance department to ensure that credit customers pay on time. Do we get it? Do we get it, please? Yes. The next one, cash flow forecasting and budgeting. Hello? Stop that right. For cash flow forecasting, it's simply talking about predicting about cash inflow and outflow, the expected inflow in the business and the expected outflow of the business over a period of time. And also, the finance department takes care of budgeting. When we talk about a budget is a financial statement that talks about the expenses and the revenue, the expected revenue and the expected expenses of the business. So it's the finance department that decides how things are done in terms of money. Do you understand cash flow here or not? So the finance department determines or decides how money is being spent within the organization. Not the human resources department, not the marketing department, not the production department. Anything that involves money, decision is being made through the finance department, which is the financial manager. Is it clear or not? So yeah, look at what I wrote about cash flow forecast. The finance department is in charge of the firm's money and how they are being spent. So how the money is being spent is decided and determined by the finance department. Do you understand the finance department? Do we understand?